boy, I hope you are ready for this week. You are going to have massive events, including the Fed, Apple earnings, and you have a Middle East developing situation that just got a lot more serious overnight last night. We have all of this for you and much more. The latest details on everything you need to know on all of these situations. What this is likely to do for Tesla as well as the broader markets. We have a lot of interesting charts and information to share with you here in this video. Let's go ahead and get into it. I don't want to waste your time with a long intro. Hit that like button if you own Tesla stock or you are buying the dip in Tesla stock on any downside movement in our markets, as well as subscribe to the channel. Did you know that the best thing for your complication is a prescription to subscribe to the channel? That's almost a proven fact. Hashtag not medical advice. Let's go ahead and get into all of this information. If you guys want to take it a step further, come trade with us live in real time. Come get access to all of the trades that I make every single day, or every time a trade is made, I do send out an alert. Link down below in the description of this video. So let's start here with the earnings calendar for this week. Go ahead and pause the video if you guys want to look at this, or you can go on X and follow Michael Tyler, and you will be able to see this on my page. If you guys are not following the account already, go ahead and give it a follow just regardless. But you do have some big earnings coming out this week. Most notable, Apple. That is on Thursday. Now, you do have a lot of your small mid-cap companies, a lot of companies you might invest in that are reporting this week. Monday morning, SoFi, McDonald's, and Air Canada will be reporting earnings. On Semi as well, that could be an important one. Monday after hours, a company in which I do have a trade on, Arista, will be reporting earnings. Pinterest, and that's basically it. You do have Transocean and some other companies, but those are really the two notable ones Monday after hours. Tuesday, Pfizer, Caterpillar, JetBlue, Amgen, BP, and Marathon Energy that report earnings Tuesday pre-market. Tuesday after hours, AMD. That one could be a big one for the markets just because NVIDIA has not reported yet. And NVIDIA is a larger kind of market mover. NVIDIA is really the reason why stocks did so well following NVIDIA's initial May earnings report. All of your big tech names, basically the broader markets did well following that. So AMD will be important. For solar, another stock I do have a trade on heading into this week. Solar's been getting destroyed recently, so that one will be interesting. Wednesday pre-market, Norwegian Cruise Line, CVS Health, Humana, Wayfair, Kraft Heinz, Generic, Estee Lauder, and Builders First Source. Wednesday after hours, fan favorite, PayPal, Roku, Qualcomm, Supermicro, SolarEdge, Airbnb, Etsy, Mercado Libre, and Elf will be reporting earnings. Thursday pre-market, Palantir, another fan favorite, Shopify, Eli Lilly, Novo Nordisk, Moderna, Crocs, Barrick, Penn National Gaming, Cigna, and ConocoPhillips will report earnings. Thursday and after hours, Apple, Block, DraftKings, Carvana, Fortinet, Starbucks, Coinbase, Pioneer, and Cloudflare. Apple is your big dog. Apple is really the last big tech stock besides NVIDIA that still is going to report earnings. Let me tell you right now, I'm not excited about Apple earnings. I don't think the numbers are going to be good at all. And just seeing what happened with Google on a slight miss, even though their earnings were almost picture perfect, Google went down like 13-14% in the next 2 days following earnings. I really don't have high hopes for Apple. And I think that could be a factor that does send the markets lower coming in this next upcoming week. Apple earlier this week surprised us with an unexpected October event. And curiously, it is set to take place on Monday, October 30th at 5 p.m. Pacific time. That's 8 p.m. Eastern Standard Time. Apple has never hosted a nighttime event before, so Monday should be quite interesting. Now, usually following Apple events, the stock sells off almost every single time. Does that happen again? I would say the precedent would say yes. It's possible that there's something in there that is exciting. Maybe there's something groundbreaking, they say. I don't know. I can't tell you. But this will be something that could have an effect on the markets coming on Tuesday. just because Apple is 11% of the NASDAQ. Another huge catalyst of this week is going to be the Fed. The Fed will be on November 1st. That is on Wednesday. They give you their initial statement at 2 p.m., and then you get the FOMC press conference with Fed Jerome Powell at 2:30. What's actually interesting about this, the markets have a 2% probability priced in of a rate cut, which is the first time we've actually been pricing in rate cuts over a pause or a hike heading into a Fed meeting in a long time. There is a 98% chance the Fed continues to pause, so that's what is going to happen. We're not going to get a rate cut unless something were to be really bad that we just don't know about yet, and that wouldn't be good if the Fed gave us a surprise rate cut. So odds are we're probably going to get the same Jerome Powell that we have heard for many months now. The inflation report on Friday was not good. Core PCE price index month over month came in at 0.3%. Last month's reading was 0.1%. So you did see a sharp uptick in core PCE prices. That's not going to allow Fed Jerome Powell to be more on the dovish side. I think Fed Powell is going to have to stay pretty hawkish in this next week ahead. Even considering durable goods orders month over month came in at 4.7% on Thursday of last week. You were expecting 1.7%. Last month's reading for August was negative 0.1%. So you've seen a big jump in durable goods orders. Same thing for GDP. You were expecting 4.3% for your GDP report. Well, it came in at 4.9%, almost above 5%. That's insanely strong growth. So Fed Jerome Powell, He's been clear recently. Fed Jerome Powell said, we're not too tight, that policy could go higher if it needs to. I'm not expecting any big shift towards increased rate hikes from here. I think the Fed is probably going to open that door for at least one more hike coming by the end of this year. But I think they're really just going to say the same old, same old. They're data dependent. They don't know how the lags are going to affect the economy. One, good month or quarter for GDP does not make a trend. And same thing with, obviously, the core PC that we seen last week. So this upcoming week, as far as economic data, you're not really expecting all too much. You are going to get the Dallas Fed Manufacturing Index. You're expecting negative 15 on Monday. A lot of data out of Japan as well as China, and that can be important because China is the world's second largest economy. Japan is the third largest economy in the world. So these things can be important. Now, Tuesday, you're going to get a lot of GDP and inflation data out of Europe. It's a big week for global economic data this week. We kind of had a lot of our big economic data last week. Our GDP report, our personal spending report, our durable goods orders, our PCE report. So we're not going to get much data for us this week. Dallas Fed Services Index, house price index year over year, month over month, Chicago PMI, Red Book, S&P Case-Shiller home price month over month and year over year. This data will be coming out at about 8:30 on Tuesday, but that is pretty much it. And then on Wednesday, ISM manufacturing PMIs, expecting those at 49.5, so getting better than even what you've seen last month at 49. This is following that U-shaped trajectory in which, your PMIs were a lot higher towards the end of 2022. They dipped, really low during 2023, and you've started to recover as of recently. You're going to get JOLTS job openings as well. You're expecting 9.2 million job openings. Last month, you've seen a big jump in job openings, which was kind of counterproductive for what the Fed is trying to do. And then obviously on Wednesday, you're going to have the press conference at 2 p.m. or the interest rate decision, technically, the report at 2 p.m., and then the press conference at 2:30 p.m. on Wednesday. On Thursday, you're not going to get too much. Continuing jobless claims, unit labor cost, non-farm productivity, initial jobless claims. That's probably not going to move the markets considering the Fed is on Wednesday. The markets are probably going to react to the Fed for multiple days as they typically do. Now, Friday, you're actually going to be getting some pretty big data. You're going to get the non-farm payroll report as well as the unemployment rate for the month of October. The unemployment rate is expected to stay at 3.8%, and your non-farm payroll report is expected at 188,000 jobs. Last month, we had a big miss, or big beat, technically. It was a miss to the markets. The markets wanted to see less jobs created, but it really beat expectations at 336,000 jobs added when the markets were expecting like 170,000. So way stronger data. It has really been the trend recently, and I think that does mean the Fed's probably going to be more aggressive, more hawkish for longer. Unless, again, there is something that we just don't know about that forces the Fed to be a little bit easier on monetary policy. One of those scenarios could be this Middle East crisis. And we did get some troubling news that came out a few hours ago. The President of the United States, Joe Biden, has delivered a war powers notification to Congress, notifying them of the recent airstrikes against Iranian-backed militias in eastern Syria on October 26th, following over 15 drone and rocket attacks by these militias on U.S. forces in Syria and Iraq, resulting in the death of an American contractor as well as the injury of at least 30 service members. Also, this letter further states that the United States stands ready to take further action as necessary and appropriate to address further threats or attacks. I took the liberty of looking up what a war powers notification to Congress is, and it sounds really bad. So, the War Powers Resolution requires the President to notify Congress within 48 hours of committing armed forces to military action and forbids armed forces from remaining for more than 60 days with a further 30-day withdrawal period without congressional authorization for use of military force or a declaration of war by the United States. Basically means within 48 hours, there could be armed forces committed to a military action somewhere. Who knows exactly what that is? I would imagine it has something to do with the ongoing crisis in the Middle East. But they can only stay for 90 days without a declaration of war. So this is like a notification that we might be getting into some kind of military conflict. This cannot be good news for the markets. I don't think it necessarily derails the markets from here, but it's not great. And if this conflict does continue to expand, we're going to be in for maybe not so great things for our markets. According to Israel, this is the start of the ground invasion as well, and their operation has moved into a new phase of actively carrying out ground operations in the Gaza Strip. They're basically saying they have to go in and completely eliminate Hamas, which is probably the only way forward at this point. This opens the door for potentially a larger conflict with other countries and groups. And apparently, Israel has announced that they are in the process of withdrawing all diplomatic officials in Turkey in order to allow for the reassessment of Turkish-Israeli relations. And it looks like the Kingdom of Saudi Arabia is yet again publicly condemning the bombardment of Gaza. Israel has issued an Arabic language urgent plea to residents of the northern Gaza Strip, asking them to temporarily evacuate south. So yeah, it looks like things are escalating in the wrong direction and, well, could get worse in the coming days. And really next week is going to be pretty precarious, because if this does get worse, then there's a lot of implications for economic damage to our economy. I would most notably note USO and the price of energy. The Strait of Hormuz is a choke point with Iran and Saudi Arabia. If they want to cause economic pain to the people that are helping Israel, aka like the US, they would just need to restrict the flow of energy to some capacity or another, and boom, well, you're hurting the Western world. So that could be a go-to for them. And USO was up a little over 2% on Friday. If you continue to see USO going higher, that's going to mean higher gas prices. That's going to mean more inflation. That's going to mean a weaker economy. So this conflict does have financial implications rather than just geopolitical implications. Now, here's a chart I've showed a couple of different times now. I think it's important to understand the S&P 500 is the red line. The blue and green lines are basically your small cap companies, your S&P 400, your S&P 600. Historically, they trade at a higher forward PE than your S&P. That's because they typically grow faster. They can grow into their valuations. But ever so recently, the gap has been very wide here. So your small mid-cap stocks have been beaten down dog stocks for the last 2 years, whereas your S&P, just carried by your top 10 or so largest companies in our markets, have done pretty well. That's because of those top 10 biggest names. Those names finally seeing some pain and flushing out could lead to a valuation reset of basically everything. And then you can get that march higher as the markets start to look forward to 2024. Lower rates, hopefully just a better economic scenario. It looks like as of right now, a hard landing seems very unlikely based on the data that we are seeing as of right now. And I should note that your small caps are trading at basically 2020 crash lows. They're trading at the same valuations you were seeing back in 2008 during the crash then. You're trading very cheap for small and mid cap stocks. This chart of the small cap stocks, basically to the point that I just made, the number of days since the last 52-week high is sitting at some of the highest points it's ever been at. You're sitting at about 500 days since the last 52-week high. So normally when you get to these levels, you're likely to see a rebound within the next 3 months or so, the next 100 days or so. If not, then you're going to be at a historical precedent that you have not seen a new 52-week high in basically the last 50 years within 600 days of the prior lows. So we'll see what ultimately happens, but small caps don't look great right now, and I think that makes them instinctively look pretty bullish over the next year or so. In terms of downside from here for our markets, the NASDAQ 100 is still trading well higher than its 10-year valuation multiple historically at about 26 or so, 27 or so, 26 and a half times. You're still trading at a little over 30 times. So there is quite a bit of room for that downside multiple contraction for the NASDAQ. And I think that really happens on Apple earnings. That happens due to a more aggressive Fed, or that happens due to just the data that we get, right? Or even the Middle East crisis. There's really those four things that are having, or potentially will have, a negative effect on our markets. Lately, it's been earnings. With bad earnings from Google, that really soured the mood for your big tech stocks. And if you take a look at this chart, we're seeing the largest inflow on record to long-term treasury bonds. And you can see this right here. It's almost $6 billion to long-term treasury bonds. You've actually seen inflows for a while now, but yet when you actually look at TLT, you wouldn't notice that because it just continues to fall. So just counteracting all of these buyers are a lot of sellers, and just the government itself issuing so many treasuries is still having that downside effect on yields, right? On treasury bonds, causing treasury bonds to fall and yields to rise. And I'll also note that the volume here with TLT has been exceptionally high based on anything else we have seen in history here. So if you start to get bonds that can actually rise, maybe because of global fears, right? Or the Fed being more dovish, really any reason that gets investors to buy bonds, it's probably going to be a good thing for a stock like Tesla for your small and mid-cap companies. And I expect this to happen at some point heading into the end of the year as the markets look forward to rate cuts and a lot more dovish Fed in 2024. But as far as what I'm expecting for this upcoming week, I think there still needs to be quite a bit of downside here for the broader indexes. Now, again, if this Middle East crisis turns into something that's even larger than it is today, well, then you're potentially looking at huge downside move, or a huge downside move. If you just get bad Apple earnings, I think that could take you to about 321 on the NASDAQ, and that would still be a drop from Friday's prices of about 7% or so. If things got, even worse from there, you could drop another 13% down to 300 on the NASDAQ. Anything under that would probably be a buying opportunity. But to get back to your October lows, that would be a fall of 27%. To get back to your highs that you have seen recently would be a rise of like 10%. So the risk reward definitely favors a downside move from here. And you have started to break down. I think you almost certainly have to hit that 200-day moving average. If you don't find support there, then you could potentially fill the gap, again, back down to 320, or even fill the gap back down to 312 until you get into an even bigger problem if you fall under those levels. I think in the short term, this would have a negative impact on Tesla, and you could see Tesla in between the 180 and the 150 range pretty easily. Now, I do think heading into the end of this year, and especially 2024, Tesla's going to be able to raise prices. Tesla's going to have a lot more optimistic future going ahead. I think investors are finally going to realize that with the launch of the Cybertruck. Again, Tesla raising prices, margins improving, and hopefully breaking some real ground on Giga Mexico and the next generation vehicle and ultimately robotaxi for Tesla. 2024 is probably going to be a good year for Tesla stock, but the end of this year, the last couple of months, might not be as good. I have a little better hopes for December, but certainly for the rest of October and November, I'm not very optimistic. But again, anything can happen. I'm not a financial advisor. I'm not a financial planner. I'm not a fortune teller. So we could just rally right back. That's possible. But I think you would need to see, a dovish Fed out of just thin air, Treasury yields rising. You'd need to see kind of conflict ending, whether that's Russia, Ukraine, or the Middle East. You'd have to see something along those lines, which doesn't look too likely to me as of right now. I don't think the Fed's going to be dovish. I don't think this Middle East conflict is ending anytime soon. I don't think Apple's going to come in with some crazy good earnings numbers. Is it possible? Sure. Is it the most likely outcome? Probably not. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time, come get access to all of the trades that I make every single day. Link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day and night, and I will see you in the next one.